Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Let's talk about what happened in ag markets today. Canola was down 11 and a half cents on the January to 637. We're going to talk a little bit about why that happened today. So stay tuned for that. Minneapolis wheat was up 4 and a quarter today at 555. That was the least or the underperformer in wheat today. We saw some good gains in the other wheat classes. Kansas was up 7 and 3/4 at 536.75. Chicago wheat up 8 cents at 548 and a half. Beans were up 7.5 cents today, or another 7.5 cents today, making a new high, 11.15 and 1/4. Corn was up a quarter cent to 431.50. Bean oil was down almost a full cent at 49.07. Canadian dollar was down 16 points at 71.34. Cattle was down 143, or live cattle down 143 at 229 a hundredweight, and feeder cattle down 218 at 325.73. Let's look at what happened week over week here. Canola actually ended the week up almost $5 at $4.80 a ton in gains. Minneapolis wheat slipped by a nickel, but we saw Kansas wheat and Chicago wheat up both over 20 cents, 21 and 1/4 cents in Chicago and 23 cents in Kansas. Beans were up 58 cents on the week after the big announcements, including a trade understanding between Trump and President Xi Jinping, as well as some confirmed soybean purchases. So we saw some good gains there. Big losses in the soybean oil market, though, almost 1.6 cents as well. Again, down considerably from last week. The Canadian dollar lost a little bit this week, even though there was some rate announcements both in Canada and the US that caused some volatility. And live cattle was down 425 a hundredweight, feeder cattle 16 at 30 a hundredweight. That's week over week. That is some information that we do publish in our weekly report. Our weekly report is very scary. Halloween edition this week. If you want to take a look at that, shoot me a message down at go to our website, CanadianAgMarkets.com, and you'll see a contact us there, and you can shoot us a message, and I'll send you this report for free. It's a really good one today. We'll talk about a little bit about that after we talk about wheat today. Wheat was a good performer today. It really rallied back from previous losses in the day, and we actually finished the week near or above highs. Here's HRW wheat in Kansas. We saw some good action that happened here, and it brought us, up to 5 and 1/4, and as you can see, close to that 100-day moving average. We're now clearly trading above the 50-day moving average. And what I like to see here too is this 20-day moving average trending higher. It's likely going to make a cross of the 50-day sometime next week, which would be a positive technical signal as well. Here is CBOT wheat. Again, we saw some similar action where we closed just barely at new highs. We have tested this resistance now from the middle of September a number of times. That previous high and the 100-day moving average are converging now. So a move above those levels would be seen as very positive. Same kind of thing here where the 20-day is turning higher, although the 50-day is turning higher as well. So it'll make it a little harder for that cross to happen. But if we see that cross, that would be another good green light. Now, spring wheat is a different story. We did see a little bit of a rally in the last 10 days or so of October, but that fell off yesterday, giving up most of the gains. Today's gains were very muted as a result. And, this market still struggles to find a bottom. It still struggles to find some liquidity. Just to kind of give you an idea of what happened in the wheat markets today as well, here's the 5-minute chart on KC. As you can see, as we got right into the open, it just basically started climbing and really only got a reprieve near the end where there may have been a little bit of profit taking or position squaring in that particular period of time. But, we thought it was going to be a day of losses in the wheat market, and it came roaring back and finished the day in the positive. All right, let's switch to canola now. As we stated earlier, canola dropped almost $12 today. Today was the first notice day for November futures. So what is exactly first notice day? So first notice day is the first day that a holder of a long futures position can be assigned a delivery notice from a short position. So the short holders assign delivery notice from the long position. So In plain English, it's the day that the futures contract essentially stops being purely a paper trade and it starts to represent actual physical delivery. So, why would that happen? So, a couple of things. One, commercials will exit the trade to avoid delivery. So, as the contract nears the delivery period, most speculators and commercials who don't want to make or take delivery must roll or liquidate their positions. Longs who aren't prepared to accept delivery sell before the first notice day, and that surge in selling, especially in a relatively thin market like canola can be, can drive the prices down. So think of it as everyone trying to squeeze out of the same door before before the warehouse operator locks the door. So another reason would be weak or weak basis or cash market signals. That's what this chart is showing here. Let me turn my laser pointer on here. So the cash market often drives nearby futures as delivery approaches. If the physical buyers like the exporters, the crushers, the elevators are already well covered or demand is weak, such as it is in canola on the future side right now. So that means the futures will converge lower to meet the cash value. So you may have heard that the saying "cash is king." This definitely applies to this situation. The convergence can look like a sudden drop, even though it's really just the market normalizing towards the cash value. So, again, to put it in another way, let's say you're a long holder in canola and you don't want to take delivery because you know that you can go to the cash market to the farm bin and source it significantly cheaper. You'll want to pitch that long position ahead of the first notice day. So that, in my opinion, that's probably some of what is happening. Um, Also, let's talk about yield curve here a little bit because that has an impact. Obviously, these carries are really large. So the carries meaning the difference between the futures months. There is a calculation that you can do that shows how close to full commercial carry a market is trading. And canola from the November to the January was trading at full carry around 14 or 15 bucks a ton. Um, so what happens is that the at the end of the period, the market converges to cash, and we almost saw exactly the same amount of losses today in canola as we saw the carry in between the two markets. So um, just to kind of show it another way, this is the yield curve. So 14, 20, I think 15 or so is full carry. Even, some would calculate it as 14 or 14 and a half. We're right there. We're right at full carry from the November to the January. So now that the January will become the front month, now we look at the March and forward as indicators of how supplied the market is, and the higher supply in the marketplace, the larger these spreads will be. So now the risk will be, if nothing else changes, we may see a convergence back down on the March into the January cash price again, if nothing else is or if nothing else changes, or if all other things are considered equal. So hopefully that gives you an idea as to what may have happened in the canola market today. I mean, there was some other outside factors such as the soybean oil losses today, but I think that the first notice day here on canola, actually the first notice day on bean oil, might have been a factor as well. So that hopefully gets you caught up on canola and helps you understand what happened here at the end of October. All right, let's move on to peas. There was a big story yesterday, I guess, in the yellow pea market. Canadian yellow pea producers will now have to face tariffs on both their major export markets after India announced a new 30% tariff on all imported yellow peas beginning November 1st. Now, there already was tariffs on peas into China, so this is just another one of our large customers who is exiting the market because they want to shore up their own supply. A government of India notification issued late Wednesday said shipments on with a bill of lading dated on or before October 31st will be exempt from the duty. So really that doesn't give anybody that much time, and anybody who had exports that were destined for India, even in the next few weeks are going to be affected by this. Now, we did adjust our S&D uh, to kind of factor in some of these losses. Now, of course, we're kind of speculating a little bit on how much this will matter and if the tariff will stick and all of those types of things. But we put some in-depth analysis into our weekly report today on peas. We currently are showing an ending stocks number based on those adjustments of 1.5 million tons, which is considered burdensome. So if you want to see more detail on that, we actually printed our entire S&D in our weekly report this week. So again, hit us up at canadianagmarkets.com in order to see that. All right, let's talk about some of the other markets today. Here's January soybeans. We hit a resistance level today, just about at 11.15. Very positive week for January soybeans, as we mentioned before, the trade understanding between the U.S. and China. And some purchases. We felt that this market had legs if those things came to pass, and we did see that happen this week. Just to kind of illustrate where that previous resistance level sits, these are highs not seen, at least in the January contract, since the middle of September. But if we do pull out a little bit, we do see that those highs don't really line up with anything specific as far as on the weekly continuation chart. But you can see here that there is, from April 2024 on the weekly continuation chart, there is a high there that we could possibly take out should this market continue to see gains. And there isn't a whole lot to prevent it from moving higher until we get, or a lot could happen to bring it higher as we get into the 1230, 1240 area. I think this 200-day moving average will become important. As you can see, it's crossing below that resistance level. So we will reach the 200-day moving average before we reach that previous high, and I might look at that as a potential pivot point. All right, let's look at corn. Corn had a good week as well. We did kind of close the last couple of days below the high. In fact, yesterday we actually saw a high, but closed the day lower. We did make back some of those gains today. 430 is where the corn market is trading right now. It tested that 200-day moving average, although it did try to break above two tests of this previous high, one from July and one from the middle of September. So, mildly positive, I would call this on the corn market from a technical perspective. All right, let's finish off with the Canadian dollar here today. Couple of days of really big losses in the Canadian dollar. We now saw that trade below the 20-day moving average. We did get a boost on Wednesday after the Bank of Canada lowered interest rates, but then issued kind of a hawkish statement, whereas the U.S. Fed also lowered interest rates by a quarter point, but delivered more of a dovish statement. So the Canadian dollar got a lift and, broke above 72 for a very short period of time on Wednesday as a result, but since has fallen significantly. So now the Canadian dollar has weakened against the US, adding to the total monthly decline, as domestic data did show some surprise economic contraction in August. So what happened here is that Statistics Canada amended their August GDP results to reflect a contraction of 0.3%. I can't remember what it was before the amendment. And then they gave guidance on September at 0.1%. Both of these are considered negative, I suppose, and particularly that August amendment, which signals that maybe this preliminary September one is also potentially lower than what is expected. All right, if you haven't subscribed to our premium content already, go to canadianagmarkets.com/subscribe to get all of our weekly reports, all of our morning commentaries, all of our ad hoc stuff when important stuff happens in the market. And of course, you get all these videos delivered to your inbox as well. If you haven't subscribed to this YouTube channel, do that now. We really appreciate it. Have yourself a great weekend. Give away lots of candy today to all the children, and we will see you again tomorrow or Monday. We will see you again Monday.